Hello students, now we are going to discuss the last chapter that is last numerical chapter of accountancy, that is account for incomplete records. This video contains the theoretical part of incomplete record, and in this video we will discuss what is incomplete record and what is the importance. Most of the part from this chapter is deleted from your book, but some question will become in your examination. So let's start discussing. Incomplete record. Incomplete record is the term used for any system of bookkeeping which does not full use of double entry. When any of the person make books of account but not on double entry system, that is debit and credit rule, so there will be incomplete record. Tools required to correct these the wrong entries is preparation of opening statement of affairs, preparation of main control account, preparation of bank account, calculating gross profit, drafting profit and loss account, and drafting the balance sheet. So opening statement of affairs. The first step is to set out the main headings which used in the balance sheet. We can then use the available information to obtain the relevant value. The main heading which is needed are fixed asset, current assets, stock, debtors, cash and bank. Current liability, creditors, bank overdraft. Loan, capital. Make sure you have learned these headings before your examination. Okay, opening statement of affairs. Your first task is set out these headings and then review the question for relevant information so that you can insert the value for many figures as possible. Usually there is two value missing, fixed asset and the capital. As capital is a balancing figure, it is usually necessary to work out the value of fixed asset. Control accounts. Control account needed for debtors, creditors and cash. So, debtor control account will be opening balance, sales, balance CD, cash received from debtors, discount allowed, closing balance. Okay. So, this is the debtors control account. Creditors control account is payment to supplier, discount received, closing balance, opening balance, purchase and balance BD. Please remember this format. Cash account, so this is the format. So it is quite easy to prepare all the accounts, but first of all we discuss the main topic, that is gross profit. Gross profit is calculated by deducting the cost of sales from the value of sales and quotient for required the calculation either margin or markup. Margin, if it is written, it means if the margin is to be used, the value of sales will be already have been calculated as a total of credit sales derived from the debtors control account and the cash sales derived from the cash account. The gross profit found by the applying the percentage margin to the value of sales. For example, if the sales is 80,000 and margin is 20%, the gross profit will be 80 into 20 is 16, divided by 100 also 16, okay, 16,000. Markup, first of all remember that markup is the gross profit expressed as a percentage of cost of sales. Quotient requires a markup value which will provide all the figures to be calculated cost of sales. The problem will be that the debtors control account cannot be complete as two figures are missing, one of which is sales. In this case, the calculation of gross profit as follows: cost of sales into markup percentage is equals to the gross profit. Therefore, the total sales is equal to cost of sales plus gross profit, and credit sales is equals to total sales less cash sales. Okay, and in the profit and loss account, when the construction of profit and loss account, there are two main points to be remembered. First is expense must be included, both the cash expenses and expenses paid by check. The second is that depreciation must be included, but remember to include any asset required during the year. Okay, balance sheet. Preparation of balance sheet should be relative to the straightforward. Fixed asset is equals to value of statement of affairs plus new assets less depreciation for the period. Current asset will be stock is equal to closing stock as a calculated in the cost of sales, debtors closing balance of debtors account, and cash closing balance of cash account, and bank closing balance of bank account if cash or hand. Balance sheet include also current liabilities, creditors is equal to closing balance of creditors control account, bank closing balance of bank account if overdrawn. Capital balancing figure which can be confirmed as opening balance from the statement of affair plus profit and loss account, profit less drawing plus capital introduced. So, summary is steps in completing the incomplete record is complete the opening statement of affairs, set out the standard working, insert the figure from the question, calculate the missing figures, draft that required accounting statements. So, here video ends. You have to remember that the incomplete record question will become in your examination. A question will be come from this chapter. Okay, so don't skip this chapter. It includes 6 marks question in your paper and it is very important to learn this chapter. Okay, thank you.